Hello, dear listeners, Amy here. Just a note before we get into today's podcast. We are currently between studios, which means our sound might not be quite as pristine as usual, so our apologies for that. Hello, and welcome back to another Sifted podcast. Today, we're breaking our streak of female guests, which we've kept up since the start of the year, but for a very good reason. Joining me from Berlin is Philipp Moehring, partner at Tiny VC. Philipp started Tiny with Andy Chung almost a decade ago to invest in super early stage companies in Europe. Its portfolio of 450 plus startups includes several European leaders, including self-driving car company Wayve, AI-powered video creator Synthesia, legal tech Lawhive, and workflow automation platform NAN. But unlike many VCs, Tiny doesn't join boards or lead rounds and doesn't really do media, so we're pretty lucky to have Philipp with us today. It last raised its third fund of £53 million in 2023 and was crowned 20 VC's top European microfund earlier this year. Before starting Tiny, Philipp was AngelList's first hire in Europe and an investor at Seed Camp. Philipp, welcome to the show.
Hi, Amy. It's great to be here finally.
Now, let's start talking about founders. What's the most notable change you've seen in the founders you meet and the pitches you see over the past year, would you say?
Very interestingly, I just had a conversation about this over lunch. I think there is a general trend, for people to do the thing that an entrepreneur should be doing more and more. And not everybody is an entrepreneur does this, but people just do the thing they want to do. And it is, I think, both, let's stick with the entrepreneurial community. It is something where we have incredible role models for people basically of all ages, of all backgrounds, from all countries, cities, in all kinds of business models, technologies and whatnot. And it is really great to see founders just say, hey, this other person did it. They come where I'm coming from. They did what I am doing. Maybe they look like I look, and they just did it. So I can also just do it, which is incredible. And I think that is what makes an entrepreneur. And I think the thing that has changed over the past year, because this is a change that has been going on for the last decade or more. The thing that really changed in the last year is that we have tools available that just exploded in their capabilities. And I'm not even talking about the last 12 months. I'm probably talking about the last 3 to 6 months, when suddenly it's not just, hey, you can put together a front end for something. No, you can put together fully working apps. You can automate things. You can just get things done in a way that wasn't possible before. And that has unlocked agency in people, which I feel is amazing to see.
Does that make it noisier than ever, though, because the kind of barriers to entry are lower, or are there just different ways you now assess and benchmark early stage companies and founders?
Yes, that definitely makes it noisier, but it's never been really quiet. So the stuff that I've done at Seed Camp, but even before Seed Camp, but certainly during those years, and then when I was at AngelList, was to look at hundreds and thousands of companies every month. At Seed Camp, we had these applications coming in, and I read all of those. At AngelList, we also had some sort of applications, and this was back when AngelList was still a little bit of a different beast. Just read through hundreds and hundreds of profiles of new companies, new founders. And so that sort of always been part of how I looked at things. So I don't really feel threatened by that. I think the one thing more often than not I was carrying through my career was to tell someone, no, you should maybe start a company around this. Maybe you can raise venture for this. Maybe you can hire that great co-founder. Maybe you can hire your first team, because this is a good idea. And I think just having the ability to try something and take it out of your head and putting it into like a product or prototype or just a workflow makes people realize what they can do and what they maybe can't go all the way on their own. But I think just people founding companies and solving problems for themselves is an amazing thing. We can't have enough of that. Is every one of those supposed to be venture funded? Can it be? Will it be venture funded? This obviously a different question. But yeah, I think it's an age of entrepreneurship that is just getting stronger, and that is super exciting.
And yes, as you pointed out throughout your career, working in this kind of, I don't know if you call it indexing the market, but at least sort of looking at a huge amount of what's coming through, you must have sort of attributes you look for in founders. What are they, and have any new ones been added in this sort of AI supercharged era?
Yeah, I think speed is a thing that used to be a little easier to spot. And, sort of this hurdle for agency, this hurdle for just doing something was higher. That doesn't always mean the people who took that hurdle were better suited to actually run a company afterwards. I think in general, that is the number one thing that makes an entrepreneur, and that makes a team of entrepreneurs too, because it's not a founder or one or two founders. It is usually the first, let's say, dozen people in an organization sort of need to be shaped that way to get stuff done. I think, yeah, having seen so many companies and founders over the years, it's kind of frustratingly pulling back to just the people. And on the way, you sort of think you found a little loophole or glitch in the matrix where you're like, oh, I can just look for X, Y, or Z, maybe where they studied or where they worked or what they've built or how many GitHub stars they were able to rack up, whatever. And all of those things are either temporary nature or not really a predictor of success. And what is a relatively, in my view, constant predictor of success is someone being able to get something done, is someone being able to act under pressure, and then, shrugging off failure and doing the next thing. So I think that is super important. And then you obviously, this is sort of highly objective people in general. And you add an insight to a problem that exists in the world, and suddenly you have a business. Because if that problem, if it's a small problem, it's a small business. If it's a huge problem, it's a huge business. And then you have to connect the two dots of identifying that, being able to take it forward, and hopefully all the way to building a huge business. And yeah, that comes back to the person saying, I see this vision, I see this small version of this here, and I'm going to go and solve this. And then being able to learn, being able to connect with people is important, obviously, for the content of it. It's also very important for being able to grow it and bringing the right people on board. So yeah, that unfortunately sort of just got simpler. Simpler in the formula, which doesn't actually make it simpler.
Yeah. You do about 1 or 2 deals a week. What's landing on your desk a lot at the moment, whether that's sectors or from certain geographies, certain hubs? What are you seeing a lot of?
So, all of it, I would say. That's the cool thing. We see in terms of sectors, let's maybe start there. Obviously, everything sort of is touched by AI. And that is either in the research, that could be in finding a new way to solve a problem, that can be applying AI just to a process, which, to be fair, was the criticism of many sort of GPT wrappers early on. I think that still means they can build interesting businesses. It is often AI as a core principle of what companies are doing. And as we said, companies like Wayve and Synthesia, who have for years worked on the underlying technology and are now commercializing those. And then the interesting part that's happening today is we have an idea of how LLMs work. And now we're thinking about how we can apply the same technology or the same principles of that technology to other areas. And I'm sure you've had many guests on who talked about biology or medicine or robots or other physical stuff. And that is all happening. And that is all sort of happening at once in every industry, from the workflow to the underlying models. And in between, there is a lot of infrastructure that needs to be built or changed. And all of those currently fundraising or all of like founders are building in all of those areas. And I think redesigning the whole full stack of how a technology company exists is madly exciting. And that's why we get to back so many different people working just in the way of how a company gets built, but then obviously also where a technology or a company is applying applying their product in an industry or in maybe a pretty niche industry at first and then something broader. We are generalists and we love being generalists because this is the kind of stuff that you can't predict with a fund thesis. There are very few people who could really say this is going to happen. When Nathan just raised his fund, and he has been one of very few people who've been on AI and the developments super, super early and very steadfast. And there are always some really good niche investors, but most new innovations over the years have for us just been pretty broad. And that's why we're very happy to be able to invest in those.
On that point about, you mentioned Nathan Benayak, Air Street Capital has just raised a $232 million fund, so pretty big. And I spoke to him, and one of the reasons he said he's sort of doubled the size of his fund is because AI is obviously super hypey, and some of these rounds are incredibly big, incredibly early. Amy Labs in Paris, $1 billion seed round. You're doing pretty small checks in comparison, 250,000 ish pounds. Do you find yourself getting priced out of lots of rounds, or is that a very small segment of the overall early stage market?
Yeah, thankfully the $1 billion seed round is not quite yet a standard across Europe. That would be quite concerning for, I think, anybody's fund model. This is definitely changing, and I think there are two parts here, which is one, the opportunity, and the opportunity not just in the outcomes. The outcomes are growing. The outcomes are more and more shaped by fewer firms, and that is something that has been happening all over the place. But because these biggest outcomes are shaped by firms, that also means the next level down, there are a few great examples in the next level down from that. And so it is, in a way, something where the whole market is changing in size and in impact, because technology, even without AI, just has become so much more important the last decade. And I think clearly saw that in the 21, 22 boom. We saw a pretty strong pullback from that in business activity or maybe valuations, in stock market valuations, but we didn't see that pullback in our daily lives. I think everybody who's listening to this podcast would say the amount of technology and the depth of technology they're using today is wildly different from one. I think that whole story is happening. The AI story is happening, where obviously now a lot of the technology industry is going in that direction, in which I think Nathan is doing exactly what he should be doing for his approach and his angle on what the market offers. The changes and maybe the, call it a hypey situation, you might call it maybe a bit of an overindulgence on and maybe a overly strong belief on what the outcomes can be. I think that generally happens. The fallout of that is negative in many ways, but also very often it's the baseline for the next wave of technology that is going to come. So as very early investors, we can look at what's happening in the Series Ds and E's and whatnot, and hopefully we have companies riding there that maybe we can sell. But it doesn't really impact what is happening at the very, very early stages. Yes, of course, these rounds are getting more expensive, and maybe they're getting bigger. We're raising slightly bigger funds. We're investing slightly more over time. I think that is relatively normal inflation that is happening there. But it is happening in that picture of everything is becoming technology and everything is being touched by technology. So it's to be expected.
Okay. You mentioned sort of when to sell. Does Tiny have a sort of a theory, a playbook on, at what point do you do secondaries? Do you exit companies? Which ones do you stick around in, even if they're, Wayve, for example, raising huge amounts of money these days?
Yeah. In general, we're trying to be really good guests to a party. So we come early and we leave late. That is how you make money in venture. That's how you make the most money in venture. Sometimes you gotta, sometimes you have to leave a bit early or go to a quiet room at a party. And so, when something's extremely valuable, it is for all investors nowadays a much more normal thing to take some money off the table. This is something that has been drilled into us from a lot of people that we learned from along the way. It's not really difficult to sell something on the way up. It's actually really easy because someone else will want to buy it. Obviously, founders want to control a little bit who's selling for signaling and for how the cap table shapes up. But on the way up, it's generally easier to sell. And so then it becomes a question of, do you sell too early, too late? Are you good at timing this? Are you good at sizing this? I think we've done a pretty good job at doing that for our investors. I think the difficult side of selling is when it collides with ego. So the general idea of venture capital is you come in early and you leave at the IPO. Maybe you stick around a little bit longer after the IPO. Although that theory, I think, has been discredited. Anyways, so you do stick around, and you want to stick around for your winners because there are only so few winners in any one portfolio. I think it's important to be realistic about the role that we have as both investors and then fund managers and fiduciaries of other people's money. And so it is good to take some money off the table. It's good. It's the greatest feeling to return money to your LPs as a venture investor. And then you got to make sure that you don't miss out on the big wins when they come later, because these companies take a long time. And it's, most fund cycles are sort of 10 years. Maybe you have an extension or two in the legal docs, but actually they run for 15, 16, 17 years. And so.
Do you have a kind of a formula, when a company has increased in valuation by X, we sell a third, or, have you tested out anything like that?
Yeah, we do have a formula. I'd rather not share it with everybody because it's a pretty great formula. But it's close to what you said. I think realistically, we need to say what is an amazing outcome for a fund like ours, and what is an okay outcome for a fund like ours. And in a company where we're able to sell something before there's an exit, because if their exit is not that we can sell something, it gets sold. Like our decision, the founder decides or the board decides to sell the company. But in a decision that we make before other people or that we make independently of other people, we tend to say, do we feel like this is well valued at this pace? So if there were multiple rounds following each other that, quickly ratcheted up the price, is that the invisible hand pricing the asset to where it should be? Or is that maybe a little bit of exuberance by some individuals? And this is not really a liquid market. So there's no correction price downward like in the stock market. And so the latter scenario can absolutely occur and does absolutely occur. And then it's sometimes a good idea to take some. table. However, the whole point of venture is that there's someone who says, no, I think this is going to continue going up, and they're right. And then they make a lot of money. So balance those two views and hopefully do it right. But yeah, it's a very, very nice problem to have.
You've painted a very sort of positive, optimistic picture for founders and investors at the moment. What would you say the biggest headaches for founders in your portfolio at the moment?
The biggest headaches for founders often come from other people not really understanding what the founders want or what they're doing. And that sounds a bit childish maybe. But in the end, the founders trying to build a business along their vision. There are also many founders who make mistakes on the way, or I don't think there's any founder who has not made mistakes on the way. I think the biggest headache is if a founder feels like there's somebody around them who's supposed to support them, who's not supportive. I think that is the biggest drain of energy for founders. So maybe an early investor being a little bit annoying, or any investor being annoying from little bit to very. I think that is difficult. Certainly negative. Whether that is press or that is in social media, negative stories that are very often. I think this is today a problem that we didn't have as much when we were a much smaller industry. Just things being very loudly announced and spoken about, and then obviously on social media, things finding their own way without any context, without any ability to respond or answer to a certain, whether that's an allegation or whether that's just a story about a company. I think those are the things that annoy the founders the most, which also makes sense because those are things the founders can't control, and founders like controlling things. That's why because they wanted to take things in their own hands. And then, like, we can always talk about bureaucracy. We can talk about all of that. That's low level annoying, but I don't think it stops anybody from being successful.
On the point about social media, I feel like we're in a different era than we were before. I mean, we always had kind of big personalities on Twitter, but I feel like LinkedIn has really come into its own now in the world of AI. There's some founders who are really using it to their advantage, aren't they? Like talking about, all the posts about ARR make me laugh. What are your kind of pet peeves with whether it's other investors or founders' social media habits at the moment?
Yeah. You said this earlier. We don't do a lot of press work. And the reason we don't do that is we learned something from Naval, who founded AngelList, which was you show it, you don't tell. You bid something and then you announce it. You don't announce it before you bid. And that sort of carried through our work. And then when we started Tiny, Andy and I were very busy. And so we're like, yeah, let's press this just work. And then it turned out to maybe even help us because we were a little bit less harder to find. So folks who found us had a little bit more time with us. I think social media is basically a fight for who screams the loudest. And I was marking earlier when you mentioned LinkedIn. I think the stuff that's happening on LinkedIn like really makes me very anxious. So when I open LinkedIn, I read 3 announcements of somebody announcing an investment or their new fund or an exit, or I don't know how they cooked their coffee this morning, and it makes me really anxious about like how mediocre I am. And I think it's just very toxic. And I think then comes as an entrepreneur and maybe also as a fund manager of a smaller outfit, there comes doubt. Am I doing the right thing? Am I out there enough? If that person's talking so much about their great success, shouldn't I also do that? Because then maybe they will get the funding, or they might get the customer, or they might get the hire that I would struggle to get. And obviously that vicious circle that we've all been caught in. So I think that's not helpful to anybody. I love writing. I really love reading. And I think, yeah, there are definitely a lot of people where I makes their writing better. I don't know. That's the writing I wanted to read in the first place. So I think there is something where we're going to have to deal with slop basically in everything. I don't know, maybe how your inbox is like, but I'm getting so many cold inbound emails with 3 follow-ups. They're all worded in a way that basically make me anxious to read them in my own inbox. That's my inbox. I'm in control of that. I think that's just going to follow us everywhere. And I don't think that's a great direction.
What have you seen amongst maybe founders? What are their good practices so they don't get affected by the hype around other companies, perhaps, that they can just sort of put their heads down and keep working? Yeah. If you even think that's the right thing to be doing, maybe it is important to be paying a certain amount of attention to what your competitors are up to.
I don't think it's healthy. Like, I mean, of course you're going to pay attention to what your competitors are doing. I think if anything, everybody overanalyzes it. I think there's almost nobody where you could say, maybe you should look a little bit more about at what other people are doing, because these founders are already hyper competitive. They're already, very aware of what's going on. I think a lot of the best founders look at what other people are doing, and they're able to put that into context. They see a product and they realize they've already went down that rabbit hole. They tried that way of finding a new customer. They tried that feature, and they can explain to you why it didn't work and what the dynamic of that is. That is, I think, what the best founders do. The folks who maybe have the most anxiety about what other people are doing, it's a pretty old trope in startups. If you just build what someone else is building, you're behind by definition, because they're already working on the next feature. And so that really doesn't help. I think most founders should spend a lot more time talking to their customers. They should talk to their team. They should talk to their founder friends. I think founders having founder friends and supporting each other in a positive way and being open about the struggles they go through is probably, from a mental health perspective for a founder, the best thing that can happen. Because those are people who go through the same problems. Then you can say, yes, I know that is going on. That is also going on for me. And when a founder talks to a non-founder, these people usually have great ideas that have absolutely no relevance for what a founder is doing.
So Sifted has found itself in the midst of a bit of a LinkedIn storm this week that we're recording it, because we wrote an article on the return of the tech bro last week, for which we've received quite a lot of praise but also criticism. Do you think the bro is back?
Is the bro back? I think the bro's back. I mean, I'm a dude, so I think it's easy for me to smile about this than, women in the industry, female founders. I think there's a very fair criticism of the tech bro screaming louder and, like trying to look bigger than they are and whatnot. I think it's really hard to have a great answer to this, to be honest. I think the reality of entrepreneurs is entrepreneurs are people who like ignore reality in a way. And so every entrepreneur, whether a male or a female, not everybody, very many entrepreneurs, male or female, definitely have a higher opinion of themselves than the average person does. And so, so that happens. I think what's definitely happening is that there is a swing, and this always goes in waves. I think culture goes in waves. whether that's on a micro or macro scale. And so we did have, whether you call it woke or you call it any other name, but we had a big forward swing, and there's a counter swing that's happening, and hopefully we can, find a healthy equilibrium over time. The fact that people are now just able to do something hopefully gives a lot more people a stronger belief in themselves. That is maybe the positive hope I have here. And I think the fact that there are more student entrepreneurs and entrepreneurs right out of university than ever before. I don't know. I'm pretty sure that is the case. Younger folks are maybe often a little bit less reflective and mature in their views. And so maybe that is where some of that comes from. I'm not the arbiter on this, but I think there's definitely a resurgence. Is it so bad or is it not? I think that's, the negative side of the tech process is obviously very easy to understand. On the other hand, we have a lot of successful people here in Europe that finally are sort of taking the chair on stage and that are competing with US folks. And I think we do have a need for more support for those successful entrepreneurs. And, if I'm from Berlin or someone else is from Stockholm, that's not just cheer on the people that went to the same school or that are from the same neighborhood. Let's cheer on the people that are in Madrid, that are in Paris, that are in any other place in Europe, because I think this is where eventually we're going to build this ecosystem and where we will have colleagues and investors and co-founders. I think the macroization of celebration is not great. Like the microization or whatever, the pullback to, oh no, Stockholm is the AI hub. Oh no, London is the AI hub. Oh no, Munich is the AI hub. And next week at Paris. I think that's a bit ludicrous. I think all those locations finally show what we've been building for over the last 2 decades. And that is just really positive to see. So I can emphasize with that side as well that, we should celebrate those successes and we should all be proud of those successes.
You mentioned that there are maybe more younger founders than ever. And I feel like that's something that's maybe being more publicly encouraged by whether it's investors or things like Project Europe, which, is accelerator with a, specific mandate to invest in very young founders. Do you think that's a good thing, or what are the downsides maybe of such young people who've maybe never even worked in another company before starting?
That's great. It's amazing. People who never worked in another company aren't ground down into compliance with stupid ideas. Young people are awesome founders because they can go about things with enthusiasm, and they do go about things with enthusiasm. I think young founders are ridiculously cool, and people who ignore some rules or maybe customs make for strong entrepreneurs. And I think, I don't think there's a problem with it. And also, like, what do? You go and you work in a crappy job out of college for a couple of years, not really making a lot of money, not really learning much because you're just doing stuff for the older people. And the alternative is you build your own company. You learn every day. You learn more every day than you would in a month, probably in a corporate setting. You get to learn how to lead. You get to learn how to communicate and work together with younger and older folks. I think that is the most incredible school anybody can go through. So, absolutely more of those. And what's the downside of it? Someone probably didn't even waste those 2 years because they learned so much. But they certainly didn't waste their earning potential, because 2 years after college, what are you going to do? Whether if you live on a grand or two per month for a year or longer, I think that.
On the topic of young people, you have 2 small daughters. In what ways do you think the technologies you're investing in will make their lives, their school era, when they get into the world of work, like what do you think will be the most drastic shifts in comparison to when you and I were at school or starting in the world of work?
I think that shift unfortunately already happened, and it's definitely not one for the better. We already talked about it. I think social media and all of the most negative downsides of that are something I really fear for. I hope there's going to be a social media ban for under 16-year-olds in Germany or wherever we will have them grow up, because I think that is just very toxic in those formative years. If I can, I want to give our two girls, just more space to be kids, more space to just be free and happy, explore what they want, whether that's, in sports or whether that's in academia. Last year, our older daughter was all about reading. This year, she's all about math. And I think that's amazing. Really having kids stay youthful for longer is something I think is important.
Different crystal ball question.
Yeah.
How do you think the VC industry is going to change over the next, maybe even just 5 years? Like, where do you see us? Where do you see us heading?
The good thing about that question is we can always look west and see what's happening, because the same thing's just going to happen here. And now that capital is so much more fluid and venture capital is so much more global, I think that's already happening. We're definitely going to continue seeing larger and larger funds. We're going to continue seeing an erosion of firms that have been around for maybe a decade or two, but haven't really adjusted in terms of personnel and flexibility and how they invest to what is the reality today. On the other hand, I'm not saying at all that sort of mid-sized firms won't exist. I think the expectation of quality has gone up by a ridiculous amount, because not only, 10 years ago, I was already Angelist. I'm old. 15 years ago when I was at Seed Camp, the founders all read TechCrunch, and they thought when they talked to VC that every VC in London or in Berlin or wherever should act like the VCs in San Francisco. Obviously, that didn't happen. Now that is more and more the case, but also founders read TechCrunch today or whatever is left of it, and they read Sifted, and they read mostly, I guess, people read on Eds and LinkedIn, and they see the valuations that are being paid there. They see the round sizes that are being raised there that they want to compete with, and they don't all want to move to San Francisco. Quite a few people want to move to San Francisco or New York, but a lot of people just want to stay in London or in Bucharest or Berlin or Madrid. And so they expect that they can do that here. And the US funds will find great companies here. I think there was another ecosystem where we had smart and liberal VCs who are happy to write big checks, and they would come here and write those checks. If you want to play with that as a local VC, the same thing applies that applied 15 years ago is don't take advantage, be the best version of what a VC could be today, not the best version that you need to be to win some deals, which is a huge difference. And then I think there continues to be much more excitement about small and micro funds. And that is excitement by individual LPs, maybe family offices, definitely folks from the industry who are backing venture funds. And then there's a flight to blue chip on the top end, because the big family offices, the big endowments and institutions, they only have so much time to allocate to venture, and they need big funds. So that is just in the nature of how they invest. And so they need to go there. And that means those funds get bigger. And thankfully, we've got those funds in Europe too now. We've got Floral, who raised some amazingly large funds, are doing an incredible job at backing founders. Their founders themselves, as we talked about, Nathan just raised that big Solo GP fund, which is definitely something unique in Europe so far. We've got many other funds used to be small and like Cherry or the Local Globe who've expanded their platform and raising more money. And I think that is exciting, and we should all be quite happy about that because it comes as these funds are succeeding. This is not just raising into the blue. These funds have had very successful first vintages, and so second, third vintages, and now they're stacking up. So I think that's happening in the VC industry. Speed is going to increase. It is always increasing. Obviously, automation across the whole value chain is increasing, whether that's in sourcing, sometimes that's in picking. I don't really believe in that in the early stage, more so in the later stage. But yeah, everybody who says, I don't believe AI is coming for me, it's definitely not for all of us in our roles. And so we need to make sure we employ those tools in a way that we can stay successful. So I think, overall, it's going to stay just generally as exciting as it's been in the last 20 years.
A few quick fire questions to end on. Where have the worst investment decisions been made over the past year? Where would you not have put your money?
Well, as I said, I don't invest in billion-dollar seed rounds, so I can just generally point in that direction. It might still make money, and I might not be that smart. I think there have been a lot of people in the last wave that were burned by huge amounts of money going into very low margin businesses. I fear that today those are investments in data centers, and that is a lot of money that is not VC money. That is a lot of money that doesn't go into VC because it doesn't go into the funds. And so that is private credit that investors are investing elsewhere. And I think that is something I'm concerned about, and I'm not investing in that.
What's one regulation you would have implemented in Europe to help out the startup scene?
I'm German, so this is pretty easy. I'm going to ban notaries.
Love that one. What one would you have removed?
I think everything the EU Inc. team has put forward should immediately be implemented, and that is both removal and addition. I think that would be an immense change to how the ecosystem works. So if you haven't read up on that, Google EU Inc., sign petition, call your local European Parliament MP, and let's get this thing through. Andreas and Simon and Wojtek and many others have worked super hard on it. This is really good regulation that should happen.
What's the biggest deal you missed?
I don't know yet. I think to once I do know. I really don't like VCs who say, "Oh, I missed that one. I should have done it," because there's really a question of whether someone could have done that. So I need to think really hard what I actually honestly missed and said no to, and it's not just in my mind that I could have invested in that. The ones that I hate not investing in are smaller successes where I just clicked with the founder. I didn't believe in their vision, and it taught me that I should. And those are numerous. I think probably hundreds of companies, and some of those hundreds of companies will have ended up in billion-dollar outcomes. I don't currently know about it, but that is probably the biggest miss where I forwent a great relationship with an amazing founder because I overanalyzed something.
One thing you never ever want to see in a pitch deck ever again?
I hate the TAM slide. I just don't believe in it. I just don't believe anybody can project their total addressable market or their market in a pre-seed deck. In a pre-seed deck, you don't need an exit slide. It just knows the wrong things. And I think those two are probably the most useless slides. Someone has a slide in their deck, you can always skip over it.
And final thing, what's the best lesson you've learned from the greatest founders you know?
Just do the thing. You can think about it, you can analyze it, you can talk to other people about it, you can tell people, I thought about doing this thing. If you haven't done it, it doesn't count, so just don't do it.
Amazing. Philip, we're up against the clock, so thank you so much for joining the show.
Thank you, Amy. Really, really great something.
And listeners, as always, please rate, review and share the podcast. This episode was produced by the delightful Maya de Rampel Hornby.